Recently at the Berkshire Hathaway shareholders meeting, Warren Buffett answered a lot of questions that were asked, and he also answered a lot of questions that weren't asked. And so one of the questions that a lot of people had is, why does Berkshire still have so much in cash and short-term treasury bills instead of going out into longer-term treasury bonds? And one of the things that Buffett said, that he didn't want to own a lot of assets in a currency that's really going to hell. One thing we like to note is that prior to 2009, Buffett was really in favor of owning treasury bonds rather than treasury bills. Number one, treasury bonds pay more interest. So since 2009, he's been consistently reducing the amount of treasury bonds he owns in favor of treasury bills. And one reason for this is that interest rates have continued to go down, and he may have been thinking that interest rates may not go down anymore. And of course, owning longer term bonds isn't very good when rates go back up. But now that rates have gone back up, why doesn't Warren Buffett consider longer term treasury bonds as something that he wants to own? Because for a little while there, the treasury bills were actually paying better than the treasury bonds. But ever since September, when the Federal Reserve has started lowering rates, it started to change. And now treasury bonds that are 10 or 20 years out, they pay a good bit more than the treasury bills that are only less than a year out. And so Buffett, he doesn't own that many treasury bonds. He's still focused on treasury bills and cash equivalents. And so one thing that Buffett had to say really stuck in our minds, and that has to do with what he feels is happening with the U.S. currency.
We're operating at a fiscal deficit now that is unsustainable over a very long period of time. We don't know whether that means 2 years or 20 years, because there's never been a country like the United States. But if something can't go on forever.
He feels that we've taken on way too much debt. The U.S. government has taken on way too much debt and is causing our currency to not be worth near as much. And we can see a lot of these issues that are coming up with people wanting to own our bonds when we get into Treasury auctions. The Treasury auctions almost failed back in October of 2023, and that's when the rates reached their peak. But since then, the Treasury bonds haven't been paying quite that much, and the Treasury bonds have actually been paying more than the Treasury bills. And we also saw some issues when we had this recent sell-off in April. We had the sell-off in April, and for a while the Treasury bond, the prices were going up, the yields were coming down, and all of a sudden that flipped, and suddenly everyone was selling their Treasury bonds. So Buffett feels that our government has been spending way too much money. He made mention of fiscal stimulus quite a bit and fiscal spending, and so he does not feel that our government currently has the will to cut as much as we need to keep our dollar strong and to keep it from devaluing and debasing. And that seems to be what he's more concerned about than a recession or anything of that nature, because he didn't feel that this recent sell-off was that much of a sell-off. He felt like there was probably going to be a period where we saw things come down even more than they came down in the first part of April. And so he's still waiting for better values than what we're seeing right now, but he's still owning cash rather than owning longer-term treasuries that actually pay better. And the other thing about longer-term treasuries is when our economy gets into trouble, usually the Fed is going to cut rates, and that causes longer-term treasuries to be worth even more. But there may be some fly in the ointment here that's going to keep the Treasury from cutting rates and driving interest rates down on the long end, and that may be what Warren Buffett is really concerned about. He may be more concerned about devaluation and debasement and inflation than he's concerned about recession coming forward. And he seems to believe that we have more risk of inflation down the road than we do of deflation that accompanies recessions. The interesting thing is Warren Buffett was actually expressly asked about DOGE and how he felt that DOGE was helping or hurting the U.S. today. And when he was talking about DOGE, he actually didn't say that much about DOGE itself. He turned his thoughts to Congress and how Congress may not have the will to be able to cut spending, because these congressional members, they are elected every year or every few years. And when they're elected, the constituents look at what they've actually done for their area of the country. And in order to get elected, they've got to spend money to do things for the people that are re-electing them. And that may be why we've got all these issues with the inability to cut costs with Congress. Now, one solution to that could be term limits. Now, if these congressional members, they couldn't get reelected, we wouldn't have the problem with them having to go to their constituents and says, we got all these things, we bought our votes, now let us come back. We could now look to the people that are the new people coming in that are going to do things that are truly good for the country and maybe cut spending a little bit. That might be good. Every currency in the history of the world has been devalued and debased. You look back at the Roman denarius, it got devalued and debased over time. It used to be based upon a certain quantity of silver, and over time you saw the edges being cut off, and you also saw them reduce the quantity of silver in the coins. Over time, we saw the value of the British pound get devalued and debased. It used to be that the value of the British pound was based upon 12 ounces of silver. Now it's worth much less than 12 ounces of silver. The British pound has been around for over 320 years. And so with a currency that's been around for over 320 years, this is the longest lasting currency, I would say possibly ever. But even the British pound is worth about 99% less than it was many years ago. So these currencies continually get devalued and debased over time. It used to be the British pound was the reserve currency of the world. Now it's the dollar. Things have moved on from the pound to the dollar. How long will the dollar be the reserve currency? We don't know, but we do know that its value has decreased over time. You can see how a dollar buys a whole lot less now than even it did before the pandemic. If you go to Subway, it used to be you can get a $5 footlong. Now those footlongs are more like $12. We also know that the value of the dollar used to be tied to gold. And a lot of people are saying we might want to go back to a gold standard. It would be very hard for us to go back to a gold standard at this point. Back in the 1920s and early 30s, the dollar was worth a set amount of gold. And so you could get a $20 gold coin. That was an ounce. And so an ounce of gold was worth $20. And it was pegged to that $20 for a long, long time. If you're really, really lucky, you can get a $20 gold coin. You can find one. I think it's worth well over $1 million now. The value of the gold isn't quite that. It's more like $3,000, $3,400. But FDR, Franklin Delano Roosevelt, took these gold coins out of circulation. And once he got all these out of circulations, he confiscated everybody's gold. He revalued the dollar so that the dollar was worth about, in ounces of gold, 1 ounce was now worth $35. And so it was revalued overnight back in the 30s. So everybody that turned in their gold, all the gold that they turned in was worth a whole lot more, but the U.S. government had it. So is that going to happen again? We don't know if the government is going to do something like confiscate gold again. They could, but we have other means of value that they are probably not going to confiscate, and they can't confiscate as easily. When we were at the meeting, there were some questions that I had written down that I was wanting to ask Buffett if I got a chance to. One of the questions I would have asked is, if the United States were to consult with you on creating gold-backed Treasury bills and bonds, how would you design these in such a way to be best for Berkshire Hathaway shareholders? I was very interested in this because it seemed that Buffett was really concerned about the dollar debasement and the dollar devaluation and a little bit about inflation. And he said in the past that he didn't like owning gold directly, and he hasn't really bought a lot of gold miners and things of that in the past. But one answer to one of these questions would be if the U.S. were to set up gold-backed Treasury bills and bonds. I mean, I'd be very interested to know how he would see these and what type of interest rate he would want. In the last few years, Warren Buffett has bought into 5 different trading houses in Japan. Berkshire Hathaway is now holding a lot of Japanese yen. He's borrowing in yen and he's holding on to yen. And in the meeting, he noted that he's going to continue to hold on to yen because he thinks that that's a smart thing to do. He also said that they may be interested in buying some European companies. And when he buys the European companies, they'd likely hold on to the euro dollar. And so I found that very interesting that he's no longer interested in just holding on to things in dollars. He's now interested in holding on to things in multiple currencies. Now, if we look at what currencies are backed by and have been backed by in the past, we might say that we'd want to own things that are backed in gold or backed in silver, because that tends to hold its value even better than the currencies. But it may not be as easy to do that. But a lot of people are turning to another store of value, and they're finding that value in Bitcoin. Now, this could be a little controversial, but BlackRock recently came out and said that the risk to not owning Bitcoin at this point may be even more than the risk to owning Bitcoin. And a lot of this is due to what's happening with Bitcoin, what people are seeing as far as Bitcoin as a reserve currency. Actually, the entire government is looking at adding Bitcoin to its stockpile to help be a store of value for the actual government. They're likely looking at this from a diversification standpoint, because as we can see, Bitcoin doesn't act like other assets. When you own Bitcoin to a portfolio, it actually diversifies away some of the risk, or the amount of volatility in the portfolio tends to go down when you add a little Bitcoin. When you add more Bitcoin, the volatility may go up, but the returns may go up greater than the amount of volatility. And so we see this. There have been studies on when is best to be rebalancing portfolios to keep the risk down. If you rebalance more often, the risk stays lower. If you rebalance less often, say once a year, the risk is a little higher, as in the volatility is a little higher, but the performance is much better. And your Sharpe ratio, which measures your risk-adjusted performance, is the best, the less amount of time where you're rebalancing. So if it's once a year, it's better than if it's once a quarter. Now, we've done some studies on this internally, and we found the best time to be rebalancing is about once every 4 years. If you rebalance once every 4 years, that gives you the very highest Sharpe ratio or risk-adjusted return. So we want to keep in mind that Warren Buffett is very concerned about the devaluation and debasement of the dollar. And one of the things that holds its value the best and is shown to be one of the best performers over the last 10 to 15 years has been cryptocurrencies. But this is a risk-on asset. So if things are falling apart, we don't want to own this. We want to own things that are going to hold its value when things are falling apart and people are scared. So what's going to hold its value when things are falling apart and people are scared is going to be precious metals like silver and gold. Typically, gold holds up better than silver. In the past, it's been Treasury bonds, but it seems more and more so that less people are interested in owning Treasury bonds because they're dollar denominated. A lot of foreign governments are buying up a lot of gold. A lot of central banks are buying up a lot of gold to help protect and provide another store of value. So it may be that gold is going to come back into vogue, especially during bad times, as a great store of value. During good times, we could look at other things. It looks like Buffett is looking at a lot of different alternative currencies because that may be what's best for him. But for a lot of people, it may be gold. It may be cryptocurrencies for those people that want to earn a lot during risk-on periods. But it seems that things like gold and other precious metals are going to be the place to be to protect in downturns. So, since you love these videos so much, please feel free to put your thumbs up, subscribe to the channel, get those notifications turned on so that you can get things and hear about things when they come out. Share with your friends. As always, stay thirsty for knowledge. We'll catch up with you next time.